That rand still trading around that 690 level as it has been for the past week or so, despite the growing turmoil we're seeing globally at this stage.
Indeed, but we see that the rand could have a go at 7 rand to the dollar on the back of the crisis in Japan. As you mentioned, the rand has traded in a range of 684 to 696 to the dollar, and it maintained this for the past 8 consecutive trading sessions. And despite the $1 billion injection into Japan and Japanese authorities' commitment to double asset purchases, there's still quite a bit of concern about what the adverse implications the crisis in Japan will have on its GDP. As such, we don't see that the rand will strengthen beyond the lower realms of the current trading range that we have seen. In addition to this, precious metal prices have slipped and volatility levels have started to kick higher, which is another reason why we prefer to sell into rand strength this morning on the back of an anticipation of an upward breach of 696.
We have seen some of those other resource commodities or currencies rather coming under pressure, such as the Australian and the New Zealand dollars. So would you expect the rand really to follow suit?
Yes, I do think I expect the rand to maintain the current levels that we have seen, although slipping up towards 7 rand towards the end of the day and possibly further during the course of the week.
We have seen the euro maintaining some firmness against the dollar in the meantime as well. We've got euro ministers meeting this week. Do you think they're going to provide any comfort to investors who are concerned about the possibility of a default from one of those peripheral European Union countries?
We have already seen that investors buying into euros on the back of the fact that the EU ministers have indicated a retooling of the current bailout plan, although this bailout plan may not be enough and may not go too far. And that's one of the concerns, but we will see some proposals being tabled at the EU summit, which is scheduled for the 24th and 25th of March.
FOMC meeting today. Any change in tone expected from the Fed as it wraps up that meeting?
We expect the Fed to keep interest rates unchanged at 0.25%. However, there is some indication that they could possibly change the tone of the statement at the end of the meeting on the back of the fact that inflationary pressures are continuing to increase, and the Fed sees this as a possible concern, but is likely to keep rates unchanged in the hope of not derailing the US economy.
We had our consumer confidence numbers out yesterday, nothing really coming out today. Those consumer confidence numbers looking a little bit weaker than expected, and that just comes ahead of those retail sales numbers tomorrow. What are your expectations on that front?
We expect retail sales to have increased in January. However, given that the consumer confidence numbers did slip in the first quarter of this year from 14 points in Q4 of last year to 9 points, we don't see this as big a concern, given the fact that it's still quite considerably higher than the low point of minus 33 points, which we saw in 2009 when the economy was in the throes of the recession. We do see confidence improving towards the end of this year on the back of disposable incomes improving and interest rates and inflation providing some kind of support.